flag pattern is a pole. You have a pole to it. A wedge pattern, you have multiple bars down. Write that down. Write that down. Remember that. We'll show more examples. Believe me, we'll show way more examples. We're just getting, getting going here. Nope. What did I say before, Yuan? There's nothing better than a flag pattern. Flag is the highest risk reward pattern there is. Okay. They is saying, Nick, when does a flag pattern fail? When it closes above the red bar high. It's the same rules as an inside bar. Okay? Same rules. Nothing changes. It's just showing us that it has extreme weakness. It also has a tendency to fail when? Anybody know? Flag patterns, wedges, have a tendency to fail where? At extreme highs and extreme lows. Write that down. Those of you that did not write that down, write it down now. I tell you guys to write things down for a reason. You're going to remember if you write things down. Okay? Vishal Sainik, on which bar would you enter a trade in case of a wedge or a flag? Have you been here all day, Vishal? Okay. So on wedges, we talk about the 7 bar, right? Narrow body bar 7. That's where you generally want to enter. Okay? On flags and on wedges. Okay? Excellent. Ricardo saying, Nick, lower the charts. Okay, excellent. All right, we're all caught up. All right, let's move forward here. We still got a lot more to go. Just want to make sure everybody understands. Drop and pop. Very simple. We've already covered this. As above, so below, so it works the other way around too. First breakout, first pull back to the 20 is usually a buying opportunity. All right, I'm not going to spend a lot of time on this, but it's important to note. All right, how about the second time? Is the second time breakout any good? At the 20? Absolutely not. No way. First time only. Okay? First time only. Here's a chart of FAZ. This was Pat W. trade. I don't know if any of you know her. She's from the chat room and also a Research Center member with us since 2007. She says, hey, Nick, can I buy this into the 20? I said, certainly, Pat. First extended move. You know you can. And sure enough, gives you a nice pop. Okay? First solar. 1, 2, 3. Right into the 20. Weekly chart. Pierces. Big pop. Happens on all time frames. All the time frames are the same. Yep, first time, Yuan, first time, not second time. First time into the 20 from an extended point, okay? Okay? Trend lines. Get your pens and pencils out. You're going to write some notes here. All right? Trend lines, one of the simplest, most effective tools for identifying breakouts and breakdowns. This trend line technique that I'm going to show you right now can make you a lot of money. Okay, but you need to know the rules. You need to know the rules. I use this technique all the time with an extremely high degree of success. Okay, I can count the failures over the years on one hand. Once you learn this, take it slow and practice it. But this is a gravy train. All right. Now I know a lot of you are always drawing trend lines. Some of you send me charts and draw trend lines, connecting highs. Some of you connect the lows and all of that. Okay, that's fine and dandy. I'm going to show you the correct way to use trend lines right now. Okay. All right, let's go to the trend lines here. All right, so right off the bat, to use a trend line technique, it must be a flat line or descending to look for breakouts. Okay. The best trend line breakouts occur after the third hit of a trend line. Breakouts do not occur on the third hit. So if price rallies up, you have pivot 1. Price comes back down, rallies back up, you have pivot 2. Price comes back down, rallies up, you have pivot 3. We are not looking for a breakout on pivot 3. In fact, this is a shorting opportunity, okay? And a good one. Price comes back down, rallies back up. It can break out on 4, but it doesn't have to, but it can. So we're not going to do anything on 4 unless we see it break out and close above the trend line. Once it does that, you can jump on board the long side. Third hits notoriously will pierce the line. However, I don't even remember when a trend line has broke the third line on a close. It's usually a shorting opportunity. If you're aggressive, you could even short it on the pierce. Fourth hit, if it doesn't break through, comes back on fifth hit, closes above the trend line, you jump on board. Another thing that's important to remember, price must be very symmetrical in time between each one of these pivots. Does everybody understand that so far? Okay, does everybody understand that so far? All right, let's get rid of these lines. I'll clear this up too while I'm here. All right, let's take a look at some more rules. Next up, we have just the opposite, trend line breakdown. So that means stock is trending higher, making higher lows and going in an upward, lower left to upward right trajectory. Price comes down, we got pivot 1. We don't know anything. Price comes up, rallies back down, we got pivot 2. Price rallies up, comes back down, we got pivot 3. Pivot 3 right here is what kind of an opportunity? Buy or sell? It's a buy. It's almost a buy with both hands opportunity. Yeah, it really is a buy. Rallies back up, comes back down. What are you going to do on 4? What are you going to do here? Nothing. Nothing. Unless price closes below the trend line, then you are going to go short. Okay, I like that, Lucas. Neutral and wait. Unless it closes below, then you enter short. Rarely do we break down on 4, but we can. Okay, rarely does the market break down on a fourth hit of a trend line, but it can. Okay, that's what we need to remember. But we let it close below the line. We don't do anything before that. Rallies back up, comes back down, closes below, you get on the short line. Okay, I'll show you guys how to calculate this in just a minute. Third hits. This technique is worth knowing just for the third hit of a trend line. I've made small fortunes off third hits of trend lines. Okay, literally small fortunes off third hits of trend lines. Yeah, you know the technique, Doyle. Excellent. Yep. Dan saying that 20 bars or so doesn't matter. It's just in time. Just count the amount of bars between time. It's just got to be somewhat symmetrical. So in other words, a good question, and I want to bring this to light as well. So just say we have a line right here, and price is moving up, price is moving up, price is moving up, and all of a sudden we get price doesn't get to the fourth hit until over here. This has a high tendency to fail. Okay, but something like this where it's pretty much symmetrical in time, that's a good one. Sue saying that do drop and pops plus third hits need secondary factors? No. No, drop and pops, though, you're normally going to get a secondary factor. It'll probably be an even number. It'll probably be a fib retrace. I mean, the more factors you can find, the better, obviously. But trendline techniques, you don't need it. Okay? Everybody on board with this so far? I'm going to show you some charts. Here, pivot 1, pivot 2, pivot 3, pivot 4 broke down, and then boom. All you're going to do to calculate the breakdown is take the last pivot high, draw a straight line down, calculate that. That's what it should give you to the downside. Okay? Pivot 3 right here, what are you going to be doing? You're going to be a buyer or a seller right here? You're going to be a buyer. The pops off pivot 3s in an ascending line are unbelievable. I mean, they're incredible. Okay? They are incredible. Michelle saying, Nick, so that on third hits, one can trade in the direction of the trend for quick profits. Yes. And it's a good trade. It's a money maker. It's a money maker. Okay? Let me show you a couple examples. I'll show you some other charts as well. Here's the home builders. 1, 2, 3. Buyer or seller on 3, Vishal? You'd be a buyer. Lily's saying, Nick, when should I take the trade after you close below the trend line? On 4 or more, yes, on the downside. But on 3, you buy the line. Okay? Or you buy the close above the line. And usually let that thing run for 3 to 7 bars. Okay? Yeah, we'll cover targets, Mike. It's usually into the next resistance level. Sometimes 7 bars. It could be higher, but usually get a great move on 3s. Here's why. Because 3s notoriously will pierce the line. What is the public going to do when they see a trend line and it breaks? What are they going to do? What's the public usually they're going to go short. So right off the bat, you get the short squeeze. Then on top of the short squeeze, you've got people like me that know about that, that's jumping on board. I mean, it's tremendous. It's one of the best trades you're ever going to find out there. You know, it's pretty incredible. No, not a head. There's not a head and shoulders. No. Sometimes it could be, but you're going to look for, you know, minimum 3 to 7 bars, next resistance level. We'll cover a few more of these. I'm going to get more into it. I just want to let you guys see what happens on threes. So here, 1, 2, 3, 4. Never close below. Never close below 5. And this was boom. This was February 2007. My greatest one day of trading ever. What a fall. This is one day in the S&P. 1440 all the way down to, you know, 1387. It was even higher than 1440. It was like 1450. Tremendous. But 3, what are you going to be doing? A buyer. Now, if you get multiple bars on a 3 daily chart, it's what we call a cluster. It's still fine. Until it closes below, stick with it. Okay? Shall I say, Nick, for bigger profits, wait for the first close after the 4th hit of the trend line in the opposite direction of the trend line? I'm not even sure what you mean by that, but trend lines won't break down until the 4th hit or more, but you've got to wait for a close below. Do not short on the 4th hit. Okay? Brian L. saying, does the angle of the trend line matter? It does. You don't want to see an angle pretty much more than 40 degrees from the pivot, first pivot. Okay? Good question. Great question. Dan saying, Nick, this sounds better than the inside bar. It's pretty spectacular. It is pretty amazing. Here, watch this trade. This was one I did a long time ago. Got to show it though. All right, so this was Mercado Libre. I forget exactly where it was. Let's go to a monthly, a weekly. I know it was a daily setup. I'm just trying to find it here. This was not it. Oh, that was not it. I don't remember exactly where it was. It's in here somewhere though. No big deal. All right, we'll look at others. But there's so many. I'm losing them now, forgetting them. All right, here's another one. This one's where you do have an inverse head and shoulder as well. So here you can see 1, 2, 3 pierces, short. Look at that, 1, 2, 3, 4, 5, 6, 7. Narrow body, then moves back up, breaks out, back test. As long as it don't close below the line, it's good. And that takes you higher. Your target on this, you just draw a straight line up from here, and that should take you, right to here. That's all you're looking for. I'm just trying to see some of these. I have so many that I've done. I'm just trying to find them all. Now here's one that failed. Watch this. 1, 2, 3. You're going to still be a buyer of 3. But look what happened here. It broke down, and then it reversed right back up. Does anybody know why this failed? Yep, you got it, Brandon. Yeah. No, it wasn't the larger time frame. Remember what I said? You have to have symmetry in time between the pivots. Does that look symmetrical? Pivot 1 and 2 time looks symmetrical. Pivot 2 to 3 looks time symmetrical. Pivot 3 to 4 look time symmetrical? Absolutely not. Right? Yep. There's no symmetry there whatsoever. Yeah, I mean, that's the only, what you're doing is when you're looking at these uptrends, all you're doing is drawing a trend line. When you get a pivot, you're just drawing a trend line from 1 to 2, and you're going to let it run out infinitely. Okay? Third hit, you're going to be a buyer. Right? Because markets don't break down on the third hits. They go up. That's just the nature of it. Right? Think of it this way. Jesus was in the grave for 3 days. What did he do on the third day? Great way to remember it. He rose. Right? Same thing. Okay? Telling you, the ancients were passing on knowledge to us without us knowing it. It's just man's ignorance not to listen. That's all it is. The third target is a good question, Vishal, saying what would the profit on the third hit be? It's hard to say. I like to generally let it run to the first resistance, and I take off half. But once you're in the money, make sure you have a break even in there. Okay? But sometimes the third hits can be just huge moves. I mean, massive. Okay. Well, the bearish one, as above, so below, Ricardo. So, you know, you get the bear. I'm just trying to find it. I got some good bearish ones here too, but I don't. I can't remember that Mercado Libre one. I did that one time. It was pretty good, but I just can't find it here. I'm just looking for it. I get exactly where it was. No, that wasn't it. I gotta look. I can't remember it now. Oh, right here, I think. Here it was. Is that it? 1, 2, 3, and it broke down. Well, I don't think that was it. Here it was. Here it is. So here it is. So I wake up in the morning, and I'm looking at stocks that are trading higher. I look at this chart, and I said, oh my goodness, 1, 2, 3. I said, third hit, descending trend line. What am I going to do here? Short. Look at that sell. Was that incredible? That was probably the best one ever. Yeah, I did it on GM too, but that was a third lower high. All right, that was pretty good, but I did it on a third lower high on the General Motors. I think that was a weekly, right? I forget now. So many. Yeah, it was right here. Yep, weekly chart, 1, 2, third, and then we got that nice sell-off. But third lower highs, you guys probably see me looking at that all the time, right? So I'm always looking to short lower highs. Always looking to buy the third higher low, even if it's not a trend line, even if it doesn't conform to the trend line. I'm always looking at it to do it because the moves are just, they're so incredible. They are really actually so incredible. Mike saying, Nick, then trail your stop after the first resistance. Yeah, you can. There's no problem with that. Yep, just trail it. Always. That's always. We see Dan saying, Nick, where did it get in on this one? I'm not sure what chart we're looking at. Luke saying, Nick, where do you find the target when you buy the third bounce? Well, you just definitely just going to look for the resistance point. It should get up there. It's powerful on 3. I mean, it's super, super powerful. Johan saying, Nick, you buy the next day or wait for a retest of the trend line. On 3s, I usually will buy the line, or you can wait for a close above it. Either one will work. Should work. Steven saying, Nick, do you need a secondary factor when using a third hit? Nope. No, you don't. If it closes below the line, get out. That's all you need to do. Dan saying, Nick, do you short upper trend lines and uptrends? No. I'm glad you brought that up, though. So upper trend lines, just say, for instance, not that they won't sell off, okay, but they're minor. All right, so this will be like a channel. They're minor, though. So say, look at this one right here, upper trend line. You never even sold off. You went higher, right? So they're always minor. This here is major. All right, I'm glad you brought that up. Yeah, that's major. Here's another one, spiders. 1, 2, 3, boom, breakdown. You see it a lot to moneymaker. Here's another one, transports. 1, 2, 3, 4, close below, back test. Look at the break there. You will see back test though. Doesn't happen that often, but you'll see it. Okay. No, it was a short, Doyle, downward trend line. But yeah, there's been so many over the years, I've lost track of them. Leo saying, Nick, if the symmetry is not the same on the third hit or close to the previous 2 hits, is it still good? As long as it's somewhat close, yeah. It's never gonna be exact. Okay, but the line, you're gonna have a level line. So make sure, if you're gonna do anything with a trend line, you make sure you use your trend line tool, right? Because you want that line to be, right perfectly. You don't want it. So here's another one, something like this. So look at it. And this didn't get to the line, but look at one high, low, higher, low, higher, low. Look at the pop. It's incredible. So you see that quite a bit. Third higher low is pretty intense. Okay. I know I have a few others. Here was another one. Let me see if I can remember where it was. I think it was right here. Yeah, right here. Look at that. 1, 2, 3. Look at the breakdown. It's powerful. It's just powerful. Simply powerful. It's simply powerful. Vishal saying that one has to do trend lines from pivot lows when the trend is up and use trend lines from pivot tops when the trend is down. Yes. Yeah. Third lower high, sell off. Third higher low, buy program. right? That's how it works. Exactly. And guys, we have a DVD out in the Money Stocks methodology. It's not the methodology DVD, but it's Strategies Revealed. That covers this pattern, right? So you can always get a copy of the DVD. Pivots to a top, there's a pattern that's very, very effective at finding highs in the markets, okay? Pivots to a low is very, very effective to find lows in the markets, okay? Now, when you're looking at pivots to a high, this is a very, very tough pattern, okay? It's tough for me, but it's effective. So please take 6 months and study it, practice it, look at different charts. Don't take my word for it. So in 2000, you had pivot. Now, these must be standout pivots. They're not pivots. This is a monthly chart. Notice that this is the standout pivots. Strong markets, sometimes you can get double top or 4 pivots. Weak markets, you generally only get 3 pivots, and then the market rolls over. Also, remember what I said to you guys. I said bullish flags, bullish inside bars, wedges, they have a tendency to fail at highs. Look at how this bullish pattern failed in the high in 2000, right? S&P right here, boom, failed. Right? Got all people on board, faked them out, and then failed, and you can see the breakdown. But again, I always watch for 3, sometimes double top, sometimes even a 4th pivot, and then you go lower. As for bottoms, look at this, 1, 2, 3. 3 pivots to a low, double bottom, higher double bottom low, and then boom, off to the races. So you'll see a lot of this take place, okay? Yeah, it could be. Generally, it's, anytime you put a pivot top in, you're going to usually get big volume. But the volume don't even matter. It's going to be looking for the standout pivot. Now, this is definitely hard to follow, okay? It's hard for me, and I've been doing it a long time. I look for it all the time. I probably have one of the better eyes to see it, because I've been doing it for so long, and I still can sometimes miss it. All right, here's a chart of GLD. You're going to notice I drew a faint upward trend line because I know if we get a 3rd pivot, they're usually going to be 3 to 4 pivots. Now, this is a strong trending market, right? Pivot 1, pivot 2, pivot 3, sometimes 4, and look at that sell-off. I mean, you're talking about a move from 100 to 90 in 4 days, and ultimately a move down to 86 in just a half a month. That's huge. That's a tremendous, tremendous move. Yeah, so all you have to do, Doyle, is see 1, 2, 3, 4. Then over here, even if you didn't catch it, you see a wide range bar from a high. What does that normally mean? Get a wide range sell-off bar from a top. What does that normally mean? Yeah, further downside, right? You got it, Jim. Yeah, further downside. So, you don't have to always catch it to the minute, but it helps if you know the pattern. Here was one that I got wrong and then ultimately got right. It was pivot 1, pivot 2. I thought this was pivot 3 and this was pivot 4. It still worked out. I got stopped out on my second half, but when I saw this bar, I said, this is it. It's in. Look at that pivot 4. Thing went from 25 to 15 in a month. Okay? That's a huge move. Yeah, you're short on a 4. Absolutely. But, I want you guys taking your time learning this one and studying it. Okay? This is not an easy pattern to learn. It's not easy for me. Like I just showed you this example where I made a mistake. I shorted right here. I said, this is it. Once I saw the down move, I made a little bit of money. Then I got stopped out on my second half. But when I saw this, I said, that's it. It's in. So, again, markets make 3 to 4 pivots to a top. In strong markets, it's 4. In weak markets, it's usually just 3. Okay? Pivots to a low. It's the same thing. Here's a chat room play. 1, 2, 3. I used to call chat room bottoms all the time. Now they seem to occur earlier in the day. I don't really get a good chance to do it anymore. But I used to just use this technique. It was amazing. But if anybody's been in the chat room for 6, 7, 8 years with me, I've probably called more bottoms than anybody in the business intraday. We would just go on, get long, and hang on to the ride. Lily's saying, Nick, does this only apply to daily charts? No. This is a 10-minute chart. This applies to all different time frames, 10, 60, daily, weekly, monthly. Doesn't matter. Same stuff. Okay? It's all the same stuff. What kind of pattern is this, guys, right here? Just out of curiosity. What kind of pattern is that? Head and shoulder pattern. Yeah. This was, I'll never forget, this was a trade we did. Sue Herrera, Bill Griffin, all the CNBC people would point out this head and shoulder, Art Cashin. And I said, we're going to go long right here. Can anybody tell me why we went long right there? Just the people that are taking this for the first time. The rest of you know. A lot of you taking for the second time we're in this trade. Anybody know? So we had a head and shoulder top in place that triggered, and we went against it. Well, it was the month of July, right? So we're looking for cycles. We haven't gotten into that yet, but take a look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. What kind of candle is that on 21? That's a narrow body bar. Yeah, it's a narrow body bar. 21 narrow body bar into support, and we have a cycle date right here. Look at this move. In 1 week, look at the move. We went from 880 all the way up to 950. That quick. Okay? Just that quick. Now, write this down. Write this down. This is important. The best moves come from failed moves. The best market moves, the fastest and best market moves come from failed moves. So I showed you that head and shoulder pattern that was in the charts right here, right? Let me draw it from here. Think about how many people, this is on CNBC, think about how many people are short right there. Think about how many people went short right there. We blast up, and that's a failed pattern. The best moves, write that down, come from failed moves. Okay, the best market moves come from failed moves. All right, everybody should write that down. All right, also we had 1, 2, 3 pivots to a low, 21 count. Got to take that. Got to take that. Well, it fails, Brandon, once price closes above the black line, which is the head and shoulder neckline. So here's your head and shoulder. All right, once you close back above, that's a failed pattern. So traders start to cover. Look at this. I mean, you got to move from 880 to 950 in a week. That's tremendous. Okay? That's tremendous. Yeah, this was a trade. We put it out there. Members all got it. We were all there. Now, here's a chart of the DXO. And again, it's just crude oil. And I was like, maybe this is pivot 1, pivot 2, pivot 3, and this obviously is pivot 4. Kind of mislabeled it. But either way, you get the gist of it. We took this trade at $2.10, I think, and we sold it at $3.45. Not too shabby. It's a pretty good percentage gain. All right, 3 to 4 pivots to a low. Okay, that makes money. So how many of you here have ever followed or heard of Elliott Wave? All right, how many of you understand it? I'm probably one of the better Elliott Wave technicians out there, but I don't use it. I don't use it. You know why? Because outside of an impulsive third wave, I've never met 2 people doing it or studying it that can give you the same count. They don't know where they are. So if I can't make money on it, what good is it? It's no good. That's the bottom line. Okay, I think the pattern, I think the understanding of it is valid. But when you get into extended waves, you get outside of a impulsive third wave, nobody knows where they are. Okay? Nobody knows where they are. So you use this technique, you know where you are. It's very, very simple. Right? People always ask me, Nick, what was your best trading year ever? And I said, well, they said, was it 2008? 2008 was second best. Best ever was 2003. And they say, why? I said, well, I was a stockbroker back then, and here's pivot 1, here's pivot 2, here's pivot 3, and then you get double bottom 4. And I said, oh my goodness, this is it. Got the pullback, higher low. Notice 1, 2, 3, narrow body bar, and I was loaded up in every stock under the sun. I had stocks like National Semiconductor, which is now bought out. I had stocks like China.com, Atmel. I had all of these beaten down equities. And look at the move I got in 1 year. All the way up to here. Now, do you think I sold here? Anybody think I sold into that 20 MA? Absolutely not. Why not, Johan? Why not? Why didn't I sell there? It's minor. You got it, Ray. Yeah, it's minor. So I know when we're going to get into cycles in a little while, I'm going to show you this. It was minor, so why sell? This should be, final pivot low. And look what it does. It goes right to the 50 monthly moving average. 50-month moving average. Is that moving average major or minor? It's major. Yeah, so I dumped all my stocks and I bought oil. I bought oil and oil stocks. Here was 2004, chopped up, went up to 2005, chopped around. Okay? But pretty incredible. You know this is minor and this is major. Just knowing minor and major, just think about how much money you can make yourself. Do you think the people in the public know this? You think the people on CNBC know this? No way. Okay? Pivots to a low are powerful. Pivots to a low, pivots to a high, powerful. Susan saying next to your main indicator was the narrow bar. What was the secondary factor? Well, I had 3 to 4 pivots to a low. So I know the bear market is over. Now you get a pullback into a breakout move here, right? Price closed above this red bar high. It's an indication of strength. Pullback, narrow body bar, 3 count with a narrow body. This should be over. Look at this move. I mean, it's there for you, you know. Okay. All right, let's take a look at the next one. Drop and pop, we've already covered that. Sentiment. We're moving along, people. We're moving along. We were going to probably get done before 6 o'clock, so we're moving along now. We just got, you know, a few more. I guess we have about a half dozen more segments. So we'll probably be done 5:30, you know, 5 o'clock maybe. Might be a little bit longer. But just give yourself 8 hours. That's normally, we usually can get everything accomplished in that time. Let me see, 4 o'clock. Now let's go a little bit more. Let's get through this segment, okay? If you don't mind, let's get through this segment because last break we took was at 3. It's only been an hour. Let's get through another one. All right, we're going to talk about sentiment. Now, a lot of the stuff that I used to use for sentiment is not really all that relevant anymore. All right, but I'm going to show you what I do like. So here's the put-call ratio. I used to love the put-call ratio, okay? A reading above 1 was bullish. A reading below 60 was bearish. A reading above 1 meant you had a lot more puts in the market than you had calls, hence the contrarian indicator, market should go up. But I do not use the put-call ratio any longer, simply for the fact that it really hasn't worked with a high degree of success since the 2009 low for whatever reason. Now, sometimes I can't ask myself why questions because I don't know why. But all I will say is I do look at it, and when I find that it works again, you'll hear me talking about it. If you ever watch myself or Gareth, neither of us talk about the put call anymore. We used to reference it a ton back in 2007, 2008, but it has become irrelevant. I don't know if it's because of the ETFs. I'm not really sure what causes it. Maybe it's a QE. I don't know what it is, Doyle, but it doesn't work, and honestly, I just don't use it anymore because I don't find it to be effective. Okay? So just to give everybody that heads up, that's what we're looking at, and we're not going to look much further into the put-call ratio. Now, if you take a look here, you're going to see short interest ratio on the New York Stock Exchange. I don't use that anymore either, so we're just going to discard that altogether as well. But what I do like to use, and I still think it's pretty effective, is the Investment Advisors Intelligence Newsletter survey. And what it tells us here, you can find this in the Investors Business Daily. What it tells us here is when the investment advisors become too bullish, it's a bearish indicator. Okay? So what I like to see for now, we're looking at a bull market. If we get a reading around 60, 61, 62, I start looking for a major correction in the market. I start looking at the charts for signs to tell me that there's a major correction on the horizon. Okay? If I don't get that reading, then there's still a bull market in place and nothing's really wrong. I think the last time I looked at this, I got to look at it tonight. I didn't get the chance to look at the Investors Business Daily this weekend yet. But I think we were in the mid-50s. Okay, it was below 55, in fact. But it's very, very easy to read this. Same with the bearish advisors. When if 59% or more, that's bullish. 20% or less is bearish. Okay, so again, I like right now it's a bull market. You're only going to care about the bullish indicator. Again, we get to around 60, get ready. Market's talking to us, and we can go down pretty sharply. Okay? Next one here I'm going to talk about is magazine covers. This has been around forever. One thing I saw in 2005 was a man hugging his home on cover of Time magazine, Home Sweet Home. I just got done selling my house in New York on the beach, and I started to short housing stocks. But I was getting stopped out all the time. So I'm just going to show you a chart of Toll Brothers, and you're going to see this magazine cover came out on June, I believe it was June 2005, June 13th. Generally between 60 and 90 days, the market will top out after a magazine cover. and you're going to see that the market in Toll Brothers, which is the leading housing stock in the market, topped out in the month of July, early August, and look at the decline it had. By the end of 2006, this thing had gone from almost $60 a share down to around $35 a share. It's quite a significant decline. Okay, so again, take a look at this pivot to this pivot top. Notice it's 14 weeks. 14 important? Absolutely. Anything times 7 is critical. All right. Next one here. If anybody's with us in 2008, I don't know how many members here today were with us, but we still have a very large group of members from 2008. Here on May 29th, we've seen this magazine. This is called The Economist, very prominent magazine. $135 oil. Okay, this comes out May 29th. Goldman Sachs. I'm just going to pull up crude futures chart. Oops. Oh boy. Let's see here. There we go. So Goldman Sachs. Let's go scroll back all the way to 2008. Goldman Sachs upgrades crude week before 4th of July. Crude at the time was trading at $142 a barrel. It tops out right at $147 a barrel. We went short, and look at the tumble this thing had. So we put out a short alert, took a short for the members, and look at this decline. Now our only fault was covering it all at 60. It still went down to 30. That's a pretty incredible drop when you think about it. So all in all, crude oil tops out 3 days after Goldman Sachs upgrades it. So something else you want to watch for sentiment is you want to watch these big brokerage firms. When they upgrade things at extreme highs, it's usually the end of the run. Okay? So does anybody know who upgraded gold futures right here? In fact, I think the week before they topped out. They upgraded it to $2,500 an ounce. Does anybody know who did that? You got it, JP Morgan. So JP Morgan upgraded gold futures right here at $2,500 an ounce, and it topped out basically 7 days later. Then you get a wide range bar from a high that tells you price wants to go lower. A lot of choppiness, and then you got the breakdown. So always, always, always remember, watch these big brokerage firms upgrade stocks at extreme highs. It's usually a sell signal. Now, why would they do that? Why would they do that? Yeah, they want to get out at the high. They need somebody to sell to, right? They need to create liquidity so that they can get out, all right? What happens if a giant firm, UBS, or any of these big Goldman or JP Morgan, Morgan Stanley, what happens if they upgrade something at an extreme, downgrade something at an extreme low? How about if they downgrade something at an extreme low? It's usually a buying opportunity. Yeah, it's usually a buying opportunity. Okay? Always watch for signals on the chart. Are you ever going to trade off of anything other than the chart? Absolutely not. But you start to look for indications that a bottom could be in. You start to look for indications that there could be an opportunity very, very soon. Okay? So you always, always watch these upgrades at extreme highs and watch for downgrades at extreme lows. All right? And you never trade off of anything but the chart. The chart will tell you what you need to know. Scott's saying, Nick, you don't use any fundamentals? None. Zero. I can't even tell you what a PE ratio is for Apple. I have no idea. I don't care about them. I don't care about the book value. I don't care about earnings per share. I haven't looked at a single fundamental aspect of trade of a stock in 15 years. And I doubt I ever will. It doesn't matter. It's pointless. All that matters is money flow. Are the institutions bringing the stock up or are they bringing it down? We could care less about any of that stuff. Great point. Mark P. saying, Nick, Amazon is a great example why PE is useless. Absolutely. Right? I mean, they have some crazy PE, but it is just pointless. All right. All right, next up, let's keep going here, making some good headway. All right. We're going to talk about max extensions. All right, we're going to talk about max extensions. Now this has to do with the 20-period moving average. Okay, let's get through this segment, then we'll take our last break of the day. All right, we still got a lot to cover though. All right, we got commitment of traders report, we got cycles, we got the 2012 forecast, 2015 forecast, and then we have the I want to show you